In this video, I'm going to show you exactly why we're not going to trade Coinbase anymore. And what I'm here to tell you is, over the past 7 days, we have made $6,400, knocking it down. All these trades are closed, and I'll tell you what, we got more to come. We're not trading Coinbase anymore. We're trading this ETF, doubling our profits. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, what we're going to talk about today is how we're never going to trade Coinbase again. Now, I'm going to show you some things in this video here that are going to blow your mind. We have used Coinbase since late last year, and since then, we have generated in both covered call premium, cash secure put premiums, and selling of the stock, and using the poor man's covered call, we have generated a massive amount of money. Now, what I want to show you is everything that we've done just this year. If you remember, late last year, I was using Coin. I was using the deep in the money covered calls. In fact, they were some $25 to $30 in the money, and we were still generating thousands of dollars a week using Coinbase. Now, Coinbase is a highly volatile Bitcoin play. Yeah, they're an exchange where you can trade multiple cryptocurrencies, but for the most part, people go there to buy Bitcoin. And that's why it is so popular and so profitable. If you look at the green column, this is where the profits lie. We have used Coinbase all year, and you could see right there, if I were to add that up, that's over $69,000. It's safe to say I love using Coinbase, and largely because I love its trading range. And we talk about this all the time. We want to get involved when Coinbase or any stock is trading at the bottom of its range because we have a more favorable movement to the upside. And that's exactly what's happening right now with Coinbase, because right now, Bitcoin itself had gotten as low as 58K. And that's where I sent out all the emails saying, look, you want to get involved with Bitcoin now because it's trading in and around 58, 59. And we're going to get that rally as all the big brokerages are going to buy more Bitcoin to fill up their Bitcoin ETFs. Now is the time to get involved. And that's in and around $200. Now you can see it's already made its move now, but that does not mean it's going to stop. This is why we're not going to play Coinbase, the stock, anymore. First of all, it's really expensive. So just to own 1,000 shares, you're going to have $243,000. So that's a lot of jack to be using on a stock. So what can we do? Well, in the past and most recently, we've used the poor man's covered call. And I've had about 3 or 4 poor man covered call success stories using Coinbase. And what I would do every single time is I would buy that 75 Delta Leap, and we would write these deep out of the money strikes. And what we're hoping for is that the directional movement is in our favor. Notice this last one I did, the stock was trading at 212. We went ahead and bought the 180 strike. We paid $55.80 for it. And we did. We got a great favorable move to the upside. Notice I used the 230 strike, and when it got in and around 230, but it just didn't quite get there, we were able to buy that option back, and then we put on our last trade. And of course, Coinbase rips higher, and we close the poor man's covered call, making about 12% cash on cash. And notice the date. The date is less than 30 days. So this is beautiful, right? We could use the poor man's covered call. We could use less capital because we're not paying the $243,000. In fact, we only used $11,000 for this trade, and we get all of that profit if we pick the directional move correctly. And that's what we do. When it's trading in and around the bottom of its range, we get involved. We're not fearful. We know that Coinbase has a more likely move higher coming. And sure enough, it did. So why are we not trading Coinbase, the stock, anymore? Drum roll, please. Because what I've recently found that there is an ETF company called Granite Shares, and they have a 2x leveraged ETF to coin. It's called CONL, and this thing moves spot on 2x either way of a Coinbase move. Now, you're going to get some slippage either way, but for the most part, if Bitcoin's up 1%, this will be up 2%. If it's down 1%, it'll be down 2%. So right now you can see the markets are live and CONL is trading for 0.9%. So that means Coinbase could be trading for 0.07%. Let's take a look. And you can see, I did not look at that before. You can see this thing trades 2x Coinbase. So what I love to do is this. If I'm going to use Coinbase, then I'm not worried about the moves in the stock. And I'm really not worried about the volatile moves in the stock. See, Coinbase will move plus $25, minus $25 in a day. So the volatility, if anything, I welcome it, because it pays us fat premiums. And Coinbase, if you catch it at the bottom of its run, you're going to catch a nice little move higher. And that's what I believe is happening now. You say to yourself, why are you buying CONL versus coin or using the poor man's covered call? Because clearly, if you bought 1,000 shares of coin, it's going to cost you $243,000. If you used a Leaps call option, well, it would cost us $55,000 to take control of 10 contracts, and then we can make the equivalent of covered call premiums for 1,000 shares. And that is absolutely beautiful until we look at what we paid for the Leaps call option. Now understand, when I buy CONL, I'm buying it for what it is. And yes, there is a management fee of about, I believe, 1 to 1.5%. But for the most part, I can buy this spot on and I get a 1-for-1 move in coin. There's no premium that I had to pay to buy CONL, meaning there's no premium that I pay anyone like I would with a Leaps call option. See, I bought the 74 Delta Leap. I paid $55.80. If we do the math, when Coinbase is trading for $212, add up 80 plus 55, and you can clearly see it's more than Coinbase is trading for. Well, that makes sense, right? You're buying the right to buy somebody's shares. This was the November 2024, so we're holding this person's shares for the most part until that time. So we're going to have to pay them a time value premium when we do this. So stepping over to our initial trade setup calculator, how much money did I pay this person to take control of their shares? And as you can see, I paid them a time value premium of $23. So that's right. I paid $23 in covered call premiums to this person. And my job is to now take this Leaps call option and go out and make some serious money or have the stock go higher. And I sell the Leaps call option considerably higher. And that's exactly what I did with this particular trade. But here is the problem. I paid $23 in time value premium. If the stock were to move lower and this time value premium starts to leak out of the Leaps option, I lose $23 of the $55. See, this happened to me with Snowflake just this month, where I paid something like $5 in time value premium. And when Snowflake went from 168 down to 127, all that time value premium bled out of the Leaps call option. So now it's trading almost 1-for-1 or no time value. So the Leaps call option, for the most part, is trading for intrinsic value. That means I am down $5 on my Leaps call option. I didn't do anything. That is the risk when we use a Leaps call option for the poor man's covered call. Now, I'm not saying we're not going to do poor man covered calls anymore. That's not what I'm saying. What I'm saying is we're not going to do it on Coinbase, because Coinbase requires me to pay for a 75 Delta Leap 25 plus bucks. Now, this was a great alternative to buying Coinbase, and we did it, and we made good money. But now with CONL, we're not going to use the poor man's covered call anymore. Because if you go and you run the premiums for this trade, you will see that your premiums are 2x Coinbase. So where Coinbase might pay you 5% on a trade, we can actually make 10% for the same trade using CONL. Another thing I absolutely love is its share price. See, when I got involved with the poor man's covered call using Coinbase, I was leveraging about 2x the money. Notice, when I got involved with this trade, basically the leverage was 2 to 1. 100 shares was going to cost me $21,000. By using the Leaps call option, I'm able to buy 2 for basically half the price. So you could almost say it's 4 to 1, because had I matched the $21,255 to own 100 shares of Coinbase, I can get 4 Leaps call options with the same amount of money. So I'm basically 3xing, 4xing my money. That's the leverage. We do this, but we're going to pay some serious, hefty time value premium. Enter CONL. Now we're getting 2x the volatility. And the share price is $53. So I can go out, and where it would cost me $21,000 to own 100 shares of Coinbase, in this case, I could actually bump up a little more cash to get me to 400 shares, and I could actually be rolling with 400 shares using Coinbase. Do you understand? We're using Coinbase amplified. This is a 2x levered ETF to Coinbase. And this is where people will mistake volatility or risk with volatility, vice versa. The thing is this: Coinbase will move in ridiculous moves. Yesterday it was up 12 to 13%. This thing flies off the charts, and it also dives off the table. So you got to be willing to understand and handle the volatility. That's why we want to get involved with these things when they're trading at the bottom of their range. Not at the top of their range, the bottom of their range. And to be honest with you, anybody that's trading NVIDIA right now, to me, that is not where you want to be right now. They are trading at the top of their range, and we have any sell-off in this market, look for that to sell one of the hardest. We don't want to get involved now. We already missed that move. With Coinbase, we didn't miss the move because we were involved at 212, and it even dipped down to 207. Now it's made its move, and everybody's talking Bitcoin. They're talking Bitcoin because Bitcoin got as low as 58,000, and it's starting to move higher. This is what Bitcoin does. They buy all the Bitcoin to load it up into their ETFs, and then when that selling is over, demand will fall, and when the new month happens, they start buying again. And then it falls. This is going to be a pattern for a while. So anytime Bitcoin is in and around 58,000, that's where I want to get involved. Now, if it moves higher, above 72, 73, we might have a different range. And that range might be more like 62, 63. But again, that's where we want to be involved. We don't want to be involved when it's trading at 75K. Coinbase is kind of the same way. People got burnt when it's trading at near 300. You could have made tons of money when it's trading in and around 220. With that said, we are not trading coin anymore. We will trade CONL. We will do cash secure puts everywhere Coinbase is trading at the bottom of its range. And if we're assigned shares, we write the covered call. And for the most part, we can write at the money strikes. And I'm telling you now, if you had to do a 30-day covered call on CONL, you're going to find that you're going to make twice as much as you would on coin, and you're going to make well over 10 to 12%. Now, here is the drawback with this. The volatility is off the charts. It was literally up as much as $11 yesterday. So you have to understand it moves 2x coin. If you don't have a problem with coin's volatility, you're good. This thing's going to move in massive swings. We like that. We love volatility. Now you say, John, that's too risky. I would look at you and say, is Coinbase risky? And if you believe Coinbase is risky, then yes, this is risky, so don't do it. But I don't think so. I think Coinbase is undervalued. It has a market cap of like 52 billion. The global cryptocurrency market cap is unbelievable, and Coinbase is the 800-pound gorilla in this space. If you want to own any of those cryptos, you have to go there. Now, there are other ones, but that is the 800-pound gorilla, and you're going to have to go to Coinbase. With that said, I believe Coinbase doubles. When does it double? I'm not sure, but every single time it's at the bottom of its range, we are going to use that as a trade. What else is a disadvantage? Well, right now, these are only monthlies. So every third Friday of the month is your expiration. So right now we have July 19th, and then the next one is August 19th. So what you're going to have to do is this, and this is what I'm going to do. I'm going to put this on my calendar. So when we get in the range of 2 weeks, right, say here's expiration, I'm going to start looking to get involved in these weekly covered calls. I might do an at the money strike. I might do a deep in the money strike and have our shares taken away. This to me is a fabulous 2-week trade during every single month because I really don't want to hold it for a full 30 days, but I don't mind. I mean, I've held Coinbase for months, not a problem. And in fact, I'll write cover calls against it and we'll just pick up crumb after crumb after crumb. And hey, you could almost look at it like this. Now, if you're like me and you have 400 shares versus the 100 shares of coin and you're getting the 2x on your premiums, you're actually doing better than doing weekly cash secure puts and covered calls on coin. This is what I'm going to do. 2.5 weeks to 2 weeks leading into the expiration, you're going to see more and more and more of me getting involved with these leveraged ETFs, these 2x leveraged ETFs to the various stocks. Because here's the deal. If you go to Google and type in 2x leveraged ETFs, you're going to find websites that have this. Granite Shares just happens to be one that is doing the 2x leverage. Now, real quick before I let you go on this, but do understand, you're going to have low volume, right? Low volume. There's a Alibaba 2x leveraged ETF. I would love to use that because I love when Alibaba's trading at the bottom of its range. We get involved, blah, blah, blah. The problem is their options have no volume. So that means there's no open interest. So I'm not going to be able to use Alibaba or the 2x version of Alibaba. I'm going to have to stick with the poor man's covered call. Luckily, I'll use the 95 Delta Leap. I won't pay much in time value, and we'll just keep using the poor man's covered call on Alibaba. With that said, Granite Shares has an NVIDIA ETF that is 2x. Now, it's about $73 to $75, but again, it has volume and a lot of open interest. So we can actually have our spreads a little bit tighter when we write our covered calls and do cash secure puts. So with that said, they have Google, they have Microsoft, they have Amazon, they have Facebook. This is what I love. I love the juice. But more importantly, and this is what I want to leave you with, is this riskier? I want you to sit back for a second, maybe pause the video and say, is this riskier? By me trading CONL, is that riskier than trading coin? If you think about it, it's not. It's not. We're trading coin. So all I have to deal with is the volatility of CONL versus the volatility of coin. If I get involved at the bottom of the range and we get our favorable move like I think we will, we're going to be able to profit from it. And hey, these are trades, okay? These aren't investments, these are trades. We put them on for a week, 2 weeks, maybe 30 days. We make our max profit and we move on. There are 8,000 or more stocks out there to be trading. These are trades. We generate the cash flow. We take the cash flow. And here's the deal. If you want to take the cash flow and dump it into the ETF, the dividend paying ETF CONY, then that might be a dividend tree plant idea. I already own 1,500 shares of CONY, but how wonderful would that be? Use a 2x leveraged ETF in CONL, generate all of that huge premium to buy the popular and high dividend yielding ETF that is CONY. Man, I don't know about you, but that's the kind of juice I absolutely love. So look, sit back and ask yourself, is this risky or is this just volatile? If it's risky, stay away. But I want you to know that you're thinking that Coinbase is risky. If you think it's volatile and you like Coinbase, this is how I'm trading the rest of the way. Hey, look, I'm going to leave it right there. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.